The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. Welcome to the offices of Duke & Duke, 100 South Broadway, Philadelphia, Pennsylvania, and we're doing some rocking and rolling today. I posted the charts of the DAX and also the FTSE, so you could take a look and see what they're doing. They're bouncing back, still in a negative turn, but still looking okay so far. Folks, the one that we really need to pay attention to today is that Nasdaq, because it is acting extremely bearish. Let's get this up here so you folks can see it. I think we should take a tip of the hat to our good friend Mr. Z by bringing this to our attention when it was making that beautiful head and shoulders pattern that we'll talk about here. You'll notice at the bottom yesterday, you see that 97.20. If you want to really start to learn this stuff, defy human nature and go up to an hourly chart or go to a daily chart and see why that 97.20 was so important. And it'll pop out just as clear as a bell that it was exactly 61% of that low. And so that tells us where we are. We rallied extremely strongly yesterday. After 97.20, we rallied up 300 handles, folks, all the way up to 1,020. That was setting pretty close to the 78% level of the high of the 25th, and it was a 50% retracement of the high that we made back on June 23rd. You'll notice now that we have three lower tops in here. Do you see those on the chart very easily? We had one on the 23rd, one on the 25th, and one on the 30th, and that tells us that this is a 135 pattern, and that is not bullish, boys and girls. It's not bullish. What you need to do is to watch the close, not a close, but if the Nasdaq breaks below that 9,900 level, we're trading around 9,940 or so right now. If we break below 9,900, that's the first sign that there's something wrong. So that's keep in mind that this may or may not work. But remember, when you're looking at these patterns, it's doing two things for you. First of all, it's defining what you're going to risk, which is the most important thing. And the second thing is you're able to take just a whole bunch of data that's out there and put it on a bar chart and say, yeah, this is where I think it's going to go. You don't have to look at all this other stuff that the fundamentals and things like that. And speaking of fundamentals, we're going to have Rich Anderson as our guest today because there is the mother of all grain reports coming out today, and it's gonna be a game changer for some of these things. So let's keep in mind that that's an important thing to pay close attention to. That's at least I think it is, but we'll find out when Rich gets on the air. Now, we've had one other question about the Bitcoin. I'll get this covered, and then we'll move over to the thing that I'd like to talk about, which will be what happens when you miss a trade, which happens all the time. Just, oh dear, hit something wrong here. Just 1 second, and we'll be, wait a minute. Here we go. 1 second. There we go. Okay, this is the Bitcoin. You can see we had the 3 drive to a bottom pattern back in March, beautiful 1.618 expansion. We rallied up and we made this monster area of resistance up here at 10,500. We're trading around 91.60 right now, but look how the market is tightening up. I mean, folks, this is telling you that there's a lot of demand coming in at this level. There's also a lot of supply coming in, but there's a lot of demand coming at this level. Now, I personally, what I'd like to see a break below 8,000, which would be right near the 382, and for that to hold, and then I would think it would go possibly higher. But this is going to be coming very, very volatile very, very soon. This quiet ranges that we're having is not like Bitcoin or the other cryptocurrencies. So remind yourself that, yeah, they are coming. So we got to be prepared, when they do come. Now, even though I haven't traded this yet, not one coin at all or one token, either one. The difference between a coin and a token, a Bitcoin or Ethereum, they have their own they have their own program to do it, their own, what do they call that thing? Blockchain. They have their own blockchain. The tokens, they don't have their own blockchain. They have to use others' blockchain. The two markets that have the coins are Bitcoin and Ethereum. That's 85% of the market. Everybody else has to use their blockchain in order to bring the cryptos to the market. Whether that helps you or not, I'm not sure. But you want to get into something that's really complicated, try getting into cryptocurrencies, because it'll keep you busy for the rest of your life. All right, I'm going to give you what I think is, let's just review this with Mr. Z yesterday, because this was just such an incredible thing that he did last week. I think you've really got to pay attention. This is one of the advantages of being in the Tiger Den. And by the way, folks, the Tiger folks have given a tremendous sales going on. You can get huge discounts, all the way up to 40%. So if you're interested in doing some of these letters, now's the time to do it. You get it at a discount. But looking at this chart, you can see the monster head and shoulders pattern here. This is an hourly chart on the Nasdaq. Mr. Z brought this to everyone's attention when we were way up there at the 10,150 level. You can see we stayed there for almost 2 days, and then we came apart and we went down to the exact D point. Not the ABCD, but that D point down there was exactly 61% retracement of that low that happened in early mid-June. So these patterns, when they work like this, works really good. Now, the rally that we've gotten back is we've rallied a little bit more than we did. We rallied 300 handles, folks. We got all the way up to 10,000. You know, that's one heck of a rally. So the thing to watch on that Nasdaq today is if we break below the 99 level, that's the first indication, yes, there could be something wrong. If it just holds that level and then goes back up, then it's got a chance to have a little bit more of a rally. So those are just a few things. When we come to the next break here, we're going to look at the Fang stocks, because I think they're telling us a lot. And that's what we do as technicians, is to look at the patterns and see if they're telling us whether there's buying or selling coming in. And there's a few things in those charts that are really, really tough. But let's take a quick look here before we come to the break, is when you miss a trade, and we'll talk about the natural gas right now. You'll notice here, natural gas, we got down to the 151 and change level. We were ready to buy that on that ABCD pattern down there at a 148, and lo and behold, it took off yesterday like a striped deer, and it went from 150, 170, and it's still going up. It got up to 1.77 this morning. Now, you can see the Gartley that happened way back in mid-May when we made the ABCD up and then the big move down. We saw that, and we could see it going down, and in fact, we were short. But the main thing is that we were looking for that big bottom to come in on that big ABCD from the early May, mid-May, and then the ABCD down took us to 146, but we didn't get there. Now we're 30 handles higher at 176. Folks, just forget it. All you got to do is just wait for a pattern. This thing trades very, very volatile. Something has happened, because you can see here, this bottom exploded out of here when they had massive supplies and the news was incredibly bearish. So this is telling you that something's changed in that natural gas market. What we're waiting for now is to see a nice ABCD retracement pattern here, and I think we'll look at this natural gas from the long side. But when you miss them, you miss them. You just got to go. And my grandma, when I was a little guy, about 12 years old, first starting to go to my first dance, she always gave me 2 quarters when I left the house. And I said, what are these for? She says, well, if you get on the bus and you can't find the girl on the first quarter, take the next bus.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has just launched their July 4th Tiger Dollar sale. For 1 week only, we've doubled all the bonuses, where you can now get up to a 20, 30, or even a 40% bonus on your Tiger Dollar purchase. Tiger Dollars are good on all TFNN newsletters, webinars, and trading services and never expire. For all the details and to get your Tiger Dollars before this sale ends Monday, July 6th, visit the front page of TFNN.com today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, we're going to talk about the Fang stocks. Well, there's actually 6 of them that I look at. This is Apple. As you can see here, we've completed a monster ABCD pattern going back to 2019. If you look at the range between 2018 into the January low, we doubled that price in 2020. That was when it was $33.30. We came down to a 61% retracement of the low from 2019, and then you made the big ABCD move up here to $370 a share, which has been the high so far. This has been by far one of the most amazing, well, there's so many amazing stocks, but this is the largest stock that we have that is traded, the most widely held, and it is worth a lot of money, folks. $1.6 trillion. You can buy a lot with $1.6 trillion. Anyway, that's Apple. We're going to do these one at a time because I think they're all very, very important. And of course, we have Amazon. We'll get it up here, and you'll see it also has a massive topping pattern with that 3 drive to a top pattern at 2,800. You'll notice the bottom here, folks. Back in March when we had that ABCD completing there at 1625. I mean, that was exactly 61% retracement from the low in December of 2019, folks. I mean, that you can't make this stuff up. It doesn't work all the time like this, but when it does, that's what you're really looking for. Folks, when you're looking at ABCD patterns, you have 3 things going for you. Number one is you are not data dependent. You're only looking at the bars of what's going on. You don't have to watch what the algorithmic traders are doing or, what Bloomberg is saying or what CNBC is saying or anybody else. You're just looking at the bars. The bars are what gives you the feedback to determine whether you're going to buy this thing or not. Excuse me. The second thing you've got going for you is you know exactly what your risk control is. Because if the D point fails by more than 2%, you know there's something probably wrong. But when they come together, like we have here in the Amazon, you got a perfect 61% retracement, a perfect ABCD. And folks, that was one of the reasons why, we were not very bearish down there. In fact, we thought there was going to be a substantial rally. I didn't think it was going to go from 1,600 to 2,700, but that's neither here nor there. The other thing about the Amazon chart that's really important is look at the big explosive blow move up, the volume move up on the 20th of April when it exploded, and then we went through the double top like it didn't exist. That is basically market feedback telling you, wow, this thing really wants to go a whole lot higher. And that's what you're trying to do is when you're looking at some of these things is to watch this. But the ABCD gives you a lot of information, and when that information is wrong, just move on to the next one. That's what you have to do. Nothing more, nothing less. Now, here's one that's in the news all the time, and this is one that is really exciting to watch. Hold on a second. This is the Facebook. We'll get up here. I don't know exactly what's happening with some of these things, but you can see the big ABCD pattern in Facebook, the low in December, the high in January, the low in March. Perfect ABCD up there to $240. We're now trading around 220. We got as low as 205 yesterday, which was a 382 retracement of the low in March. So the thing that you have to pay close attention to in the Facebook is this big wide-ranging bar that we had on Friday. Folks, that's telling you that something has changed. You don't see something like that on this chart that had that much power and that much volume on the downside. That's definitely market feedback that somebody's scared of that stock right now. I don't know why they would be. It's true, it's been as high as 245, now it's 220, but that bar is very, very informative from a technical standpoint. It's telling you that there was a lot of information being forced down, and so you want to watch what happens on the rally back up. So if we went to 205, the 382 on that rally back would be about 222. So if we don't get above 222, I don't know where it's trading today, but that's what I would be watching is to see what it does at. Now I don't trade stocks, but I watch them because they determine what these other indices do, and I do watch the the Nasdaq and the others just to see what's happening. So that's what we're watching here in the Facebook. The next one we're going to take a look at is. It's okay. It hit 221 yesterday. Thank you very much. That was the 221 was the 382 retracement back. Can you tell me where it's trading right now in the Facebook, just so I can get a rough idea? Okay, hold on a second here. Let's get this up here, and we'll take a quick look at it. Okay, here's Google. Google is probably the only of all these ones. It's the one that is the most mysterious technically. You can see that we did not make a new high in Google. We did not make an ABCD. We went up to the 78% level at 1430. Then we made a high up around 1470. Then we had the big reversal down yesterday, also something that's quite important. So all of these that we're looking at are telling you that something happened on Friday of last week. There's probably some kind of an announcement of some kind that tells you that something's different in these Fang stocks. They just don't have the same. Of course, if they make new highs, this will all be wrong. Now let's take a look at Microsoft, even though it's not in the Fang group, it's something we got to pay attention to, because between Microsoft and Apple, you're looking at 22% of the index of the Nasdaq, and that's why it's important. You notice you have a perfect ABCD pattern there at the bottom at 132. That's where we were looking at the low from December of last year. And what we do, we went up, we made new highs. You can see on Friday we had this hanging man candle that's there within a dollar and a half of the 1.27 expansion. So unless we can get Microsoft above 208, I would think that it is more or less heading into the downside on this. So that's what we're paying attention to. So that's where. Now here's the interesting one. This is the one that looks the most bearish of all, in my opinion. And let's get this up here. And that is Mr. Netflix. You can see we made the 61% retracement there in March, okay? Then we made the ABCD up at the top there. And look at the 3 drive to a top pattern, folks. I mean, this is a classic. And then look at the move down. As long as Netflix doesn't get above 472, this stock should start to go down, and it should go down a lot, because it's a 3 drive pattern. You want to see a 3 drive pattern? Go over to the left side of the chart, and you'll see it back in January and through April, February through April of last year. You see you had the 3 drive to a top pattern. You didn't take out that top. You went up, almost made a double top, and then the thing dropped in half. So pay attention to this pattern. This is a monster up here. You got double 1.27 numbers on the long-term daily. On the short-term 3 drive pattern, you've got a beautiful ABCD and a 1.27. This thing is screaming, please sell me, please sell me. But when will you do it? I don't know. All right, folks, we're going to have Rich Anderson as our guest when we're coming up, because we got a big grain report to talk about today. And Rich is in the area of Minneapolis, where they not going to have a police department very soon, so I'm anxious to hear what he has to say about what the folks are saying about that. So I think he'll give us some interesting things. If you'd like to chat with Rich, it's 877-927-6648, and we will be talking with him, and he'll give us some ideas on this. This is a huge grain report, folks. This is one of the big ones that you have to pay close attention to, and that comes out, I believe, at 10:15. We'll be right back.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're talking with Rich Anderson of Anderson Capital Management out of Minneapolis, Minnesota, the home of the non-police stations of the United States. Rich, how are you doing over there as far as safety, buddy? You had to call 911 recently?
No, we're doing good. We're in the suburbs. It's green and beautiful, and it's been raining a lot. You know, it's like a tropical garden, which is part of the problem with the grain markets. Is everything's almost perfect.
Yeah, that's for sure. Now, we've got, Rich, we have a question for one of our listeners, and that is Minneapolis actually going to defund the police department and it's going to disappear?
That's the only way that they can get control of the union. You know, they basically, it's all about the union stands behind its members, as does the teachers union or, the service workers in Las Vegas. And the city council's decided they don't like that. And there's only one way to fight it, and that's just get rid of the department. Then you get rid of the union.
Wow.
So it's union busting. That's what it is.
Okay, Rich, tell us about the big green report we have today. What is it?
Well, the major reports today are, you have two USDA reports. You have the stocks, that's how much inventory we have on hand as of, right now. And then the other one is acreage. How much did the corn and beans did the farmers plant? And, of course, because of the low corn prices, a lot of people expect that they would be less acres of corn and more acres of beans. But historically, you put your fertilizer and stuff on, and so there aren't that many acres you can change, number one. And number two, once the farmers got that corn planter hooked up, and they got it hooked up early this year, and you get started early, you tend to plant more acres of corn, not less. So I think that they'll likely be disappointed. There's been a huge short position by the commercials in the corn market, and there has been some covering. And you never can tell. I mean, they can always come up with a surprise. They did a resurvey of some of last year's crop, and they'll figure that into the numbers today on the stocks. But the key thing with reports is don't try and second guess them. Wait until the market comes out, which is at noon Eastern time, 11 o'clock Central, and then if the market closes higher, it's a bullish report, and if the market closes lower, it's a bearish report. Because the expectations and all the positions, it's really the close that will tell you what's for real. And so I try not to stand in front of an oncoming train. I wait for the reports to come out today. I sent you some estimates, and you could put them up online if you wanted to. But I just always wait until after a report. There's a huge short position in the corn. The other thing we've got coming is the weather with the 4th of July. We've got heat coming in here, but if you've got heat and plenty of moisture, it's not as big a deal. In 2 weeks, if you have heat during pollination, that's a big deal. The other big deals today are who's talking and where. Powell and Mnuchin, they're testifying. Powell released his speech yesterday, and you got Prime Minister Johnson talking in England, and everybody will be listening to that. So those are kind of the interesting things. And then, next month we'll be talking about at least $1 trillion worth of stimulus, paycheck protection program, but they'll put some money into the state and local governments and the expansion of the unemployment insurance. So they'll add that, and they'll probably do a bunch of aid to the hospitals. Because with the COVID, everybody's staying away from the hospitals, and the hospitals are losing a bunch of money, so they need some help too, just like Boeing and everybody else that got help. I thought the interesting thing was that the amount of Vanguard ETFs, corporate ETFs that the government has bought in the last couple of weeks. In just 2 months, the Fed's become the largest holder of the iShare investment-grade corporate bonds. They got $54 billion of those. Second largest holder of the Vanguard short-term corporate. They got $29 billion of that. And they got $36 billion of the Vanguard intermediate. And that isn't good enough just buying ETFs. So now they've got 800 companies that they're going to start buying individual bonds. we're going to have a bunch of companies that can raise money, but that doesn't mean they're going to produce anything and make any money. So it's really about, until we have a vaccine or a treatment, the economy's going to, putter along. The housing part of the economy is great because interest rates are so low, everybody's buying a house and locking it in. Yeah. But companies still need to make money, and
Rich,
that is the problem.
We got a question from Mr. Z, and that is there ever going to be a time when farmers will cut back acreage in 2021 or 2022? They're making a little money, I know, even at these prices, but my goodness, I mean, they're really getting hammered pretty badly. What's the outlook long term?
Well, eventually, first of all, for this year, you have crop. There will change when we put in crop insurance. And crop insurance for corn this year is $388. So where was my motivation to cut back when I got 75% of $388 is my locked-in crop insurance worst case? Next year, the crop insurance, which is set in February, will probably be a lot lower than that, and so then you might see some cutbacks in acres next year. But this year, the motivation wasn't there because of the crop insurance. I mean, he's right. We're not making any money at these prices, but the crop insurance, it protects you.
Okay. Wow.
The harder hit people are the cattle and hog people.
Yeah. Okay, speaking of hogs, we got hogs down around, August hogs are trading around 48 cents. I mean, that's got to be not too far from cost of production on those little critters, right? Is that right?
I think it's way below the cost of production. In fact, if you go to a sale and you're pulling a trailer, you want to make sure that trailer is locked, because otherwise you might go home with a bunch of baby pigs you didn't know about, because if they can't afford to feed them.
Wow.
But the anticipation had been that we would get all this business from China, and that would be with the pork. Well, now you've had a lot of COVID cases in all these packing plants, and the Chinese outbreak just a month ago or 2 or 3 weeks ago with some salmon from Norway. The virus was in the salmon. So the Chinese are not interested in importing a bunch of pork that's come from factories, from the packing plants where they've had COVID workers. That's part of the problem. And the stores, they're selling like crazy, but the restaurants, restaurants and schools is where a large portion of our meat goes, both pork and beef. And, the schools haven't exactly been open, and the restaurants sure aren't open. So that's an ongoing problem. And again, it has to do with vaccines and treatments. Everything is tilted until we get some solutions that way. And that, at the soonest, I would think it would be beginning next year.
Okay, Rich, thanks for joining us today, my friend. We'll be watching this report closely today, and we'll have you on soon. Be safe over there.
All right, thank you. Bye-bye.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS, Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has just launched their July 4th Tiger Dollar sale. For 1 week only, we've doubled all the bonuses where you can now get up to a 20, 30, or even a 40% bonus on your Tiger Dollar purchase. Tiger Dollars are good on all TFNN newsletters, webinars, and trading services and never expire. For all the details and to get your Tiger Dollars before this sale ends Monday, July 6th, visit the front page of TFNN.com today.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, folks, we're going to talk just a second here about the euro. This is a 60-minute chart. You can see this ABCD pattern coming in at the 61% retracement, 50% retracement, 1.618 expansion at 111.20. That's what it's doing now. Now, the euro is one of the things that I trade just about every day because it's got a pattern in there usually that you can go in and look for $400 or $500 and not having to risk very much. An example of that is this morning. You'll be able to see as I post this. This is just a 15-minute chart. You'll notice that we've made a perfect ABCD pattern there, right on the exact 1.618 expansion. The ABC number came exactly at the 1.618 expansion. So if you buy there, this is market information. It's either going to work or it's not. And if you believe in the pattern, this is one of our favorites. You risk 20 pips or less, and it's already made your first $400 or $500 today. You've taken out the high of the first ABC leg. So that's what we're watching. So it's all about risk control, folks. You don't know which ones are going to work. You really don't. You never will. The only person who knows that is God, and she doesn't trade anymore. So keep in mind that it's all responsibility. You have to take responsibility on those trades, and that's what's really important. Now, since we're talking about that, let's move over and take a quick look here at what might be a very good trading opportunity here sometime in the next 24 hours or so. So let's get it up here so we can see it. And that is our good friend across the pond, the British pound. And as you can see here, you're going to have a 3 drive to a bottom pattern down there at that 122.20. You're going to have a double ABCD pattern down there at that level. You're going to have a 78.6% level at that point. So all of that tells you that you want to be really, really close to be buying it down there at 122.20 or 122.20, and that will give you a very, very good risk-to-reward ratio to work off of. You only have to risk about 30 pips, which is under $200, and the profit on it will be 5 times that if it's right, and that's the $64 question. Whether it's right or not, we don't know. Look at the left side of the chart, folks. When you made back, this was back in May of 2020, we were trading at 124.60, and if you did the work, you can see the 3 drive patterns that came in there at 120.80, and it went from 120.80 all the way up to 128. That's 8 handles, folks. That's $4,000 for a risk of probably $300. I mean, that's like a 14-to-1 payoff. So that's what you got to keep an eye on, because these things don't work all the time, but when they do, then you've got something that you can hang your hat on. So that's the main thing. Now we're really into magic time in the stock market, so give me a second while I check and see how we're doing here. We should be topping here in stocks here in the next few minutes, and I posted that to let you take a look at it. And we'll see what's going on here. We've got a nice move going here in the Nasdaq, exceeding right up to the 78% of the previous day's high. The E-mini is so far the negative one of the group, but we should be topping here if this is correct in the early morning hours, and we'll see whether that continues to go on. And we'll do one thing at a time as we go through here. Someone's asked a question, how am I handling the grain report? I'm doing exactly what Rich is doing. I'm waiting to see what the report is, and then I'll react then. I'll give it a day to shake the tree and stuff. And just from personal experience, you got to stay out of those reports. I'll tell you, I made one of my biggest moves ever by not going into a report way back in 1976 in June of that year, right before I went to work at Drexel. I had huge positions, and the report was coming out, and I had a monster profits. And the report was so bearish, folks, they didn't think there'd ever be any soybeans except in the Smithsonian. What did they do? They opened about a penny higher and went down the limit 4 days in a row. And so when these things are over, they're going to tell you that they're over. And that's one of the things that you're doing as a technician, is relying on market feedback of what's really happening in the market. Not just, how much is out there, because we don't know that. We're not bean counters. We're just looking at bar charts. So the only thing we can do is rely on what the information of all these other traders is giving us, and that'll happen after the report today. So tomorrow we'll talk about that report and how it reacted to it, but you want to wait till it's over. That's the bottom line. It's just something that you got to be really, really close to it. Now we're getting up here near the magic time here in about 3 minutes at 9:50. We should be looking at a little bit higher high in this market here. We're trading at 30.50. We could get as high as 30.60. But I don't think we will, and then we'll see what happens here after the first part of the morning. Now, one of the reasons why this first part of the morning is so important, folks, is the stock traders, these mutual fund guys, they put their orders in the first 45 minutes to be filled. They want to be buying today, so they put their order in the first 45 to 1 hour, and that's why that you have such great volatility during that first hour. That's why floor traders used to call it magic time, from 9 o'clock to 10:15. That's the time when most of the orders are coming in, and that's what you want to keep an eye on. Whether that works or not, I don't know, but sometimes it works, sometimes it doesn't, but nothing works all the time, and that's the key of what we're paying attention to. We have a question here about the copper, and let's get this up here so we can take a quick look at the old copper. Where is it here? There we go. Here we go. Get it up here. Yep, copper's still moving up, but we're above the 78% level in copper now, folks. So it's still acting pretty good. We'll get here to let you take a quick look at it. You'll notice that when it made it monster bottom down there, when everything else did around March the 23rd, that was a big, big move to the downside. We had been down. We'd gone from 264 down to 196 with basically no buying at all. And here we are now. We're setting at the 84% level at 273, and we have been up, let's see how many days in a row. We're up 12 days in a row in copper. So it's a little bit overbought, to say the least. And but this is where you have to go down to a smaller time frame to see if there's anything there that would tell you that there's a possibility that copper might be making some kind of a top today, and we don't know that. If we take a quick look at this, we'll just draw one in, and we'll whether see it works or not. We'll have to get it up here, but you see here, this is what you're looking at now in copper on a 15-minute chart. The high today has been 273.5. We're trading at 273. You've got an ABCD pattern in here. You've got an expansion. So you got a 3 drive to a top pattern. So if you're going to play copper from the short side, you got to risk about 2 cents. So from 273 to 275 is $500. But if it works and it does what it did on the BC swing, and it dropped 13 cents, you're looking, well, not 13 cents, it dropped 8 cents. So you're looking at a potential of a $2,500 profit versus a potential loss of $500. So the risk reward on that pattern is always in your favor. But the $64 question is, you don't know what's going to happen next. But boys and girls, here's the key. You don't need to know what's going to happen next to make money, because you don't know. So you've got to practice on believing in what these patterns can do for you. They don't work all the time, but they work some of the time, with the probabilities being on the positive side. If you flip a coin 100 times and it comes up heads 65% of the time, something's wrong with the coin. 877-927-6648.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
If you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Bam! If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks and commodities, along with specific recommendations including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, someone asked me a question. Folks, I have never traded cryptocurrencies at all. Nothing. I've been watching it, learning it, but I haven't done anything. I listen to some of the people that are pretty smart about this, and I believe that these things called cryptocurrencies are related to blockchains. The blockchains are the things that are going to be changing everything, and the cryptos will be right behind it, most probably, because there's going to be a time not too far in the future where some of these governments, because of what they've done with printing money, is going to come up with something that's going to be a little different than what they're expecting. That's my 2 cents worth, but I'm just waiting for that time, and we'll watch it as it comes. Now, I want to chat just a little bit here. We've only got a few minutes left, but I put a chart of the Christmas corn. That's December corn. That's the one they're planting right now. It's the old adage is the corn is high as an elephant eye on the 4th of July, and it's going to be that high for sure this year because they have a really good data coming in from the weather market, and they got the right humidity, so the corn is pretty good. But the difference between where it is on the 4th of July and where it is on the 15th of August can be pretty different. So what I'm looking at here in this corn, you can see we've had a 14-cent rally here in corn into this big report that's coming in. That tells you that there's some shorts out there that are nervous. Now, what I'm waiting for is to see if the market can come down to the 1.27 or 1.618, and I would be a buyer at 1.618 on the December corn if it were to hit there today, because it would tell me that if we don't have to risk more than about a nickel, $250 beyond 1.618 to see if I'm right or not. That's it. That's basically, that's what I'm watching, Bob, is I'm waiting for that to see if it gets there. I really believe in 1.618 expansions, those of you that study under me, because if the market gets beyond that, you don't know where it's going to go. That's why the pattern is so good, that it gives you an instant market feedback. We've seen, look at the euro today at 1.618. It rallies $500 in a matter of, just a few hours. So that's why that 1.618 is so very, very important. It's the end of the Fibonacci spiral. So that's the key to watch. So we'll see you guys tomorrow.